It's Tuesday, September 27, 2016. This is Ron Feinstein, the Consummate Price Behaviorist, with new Wave Forecasting, with a recap and review of today's market action, and of course, much more importantly, what I think the implications are for tomorrow and beyond. The good news I have to share, I believe, is that I see some recognizable patterns setting up here on these short-term time frames, which I think are less likely to be spotted by others. So in any event, we'll jump right into crude oil here. You know, I've been talking about crude essentially going in a triangle type of sideways pattern here more than directional, but prices did squeeze out a little bit of a lower low here today, but there was no downside follow through. So this tells me that we are probably in some type of a ABCX-ABC correction, which ideally will complete here with a 5-wave drop from this last move. So that would be ideal here to break 44, rally back above 45, perhaps even to 45.5, and then get slammed one more time. So ideally, the market ought to be a courtesy sale right here above $45, looking for a drop and then a rebound. But again, this is there could be a number of trades inside this little sequence, so I'm just going to try to lay them out in advance and hope they'll lay out and present the way I suggest they will. Now, there is certainly a bearish count and forecast for nat gas, and I suppose it would just be like the market to turn and just collapse here, but I don't see it coming. I do think we are likely still in a B-wave consolidation. We've got the report coming out on Thursday, the 76% retracement if the market is a stone cold but unknown courtesy buy right here. We could be looking at, this 295.5 is the 76% retracement here in the nat gas. So I'm not calling this one a courtesy dip, but I think it probably qualifies. But again, there is a bearish case to be made here because we did fail exactly at that resistance I mentioned on the video yesterday where the sellers came in on the previous break. So we'll see. If the market starts to accelerate, we could be looking at a 285 handles soon, but I again think we're more likely going to stabilize at 295 and trade higher and or perhaps just sideways. Well, the 10-year came down to the really important support level, just above 131.25, I should say, and held and rebounded and made no upside progress. So I still think we are probably looking at a terminal wave. It does appear to be extending, but we're getting wave overlap, which suggests that it could be a rising wedgie diagonal triangle type event. So for now, I've got to say higher still, but perhaps not too much more, but certainly no reason to be on the short side yet. None whatsoever. You know, sometimes finding the order in the disorder is really the what it's all about. And I really think that this euro currency forecast may just play out to perfection here. I believe we are now looking at a bona fide courtesy dip scenario here, and I am going to go ahead and change the color to suggest that. And the 76% retracement, which would be ideal, is somewhere in the vicinity of 112, which is, of course, the same number I had been talking about earlier in the week. So 112.20 to 112 still the possible zone of courtesy dip zone for the euro, on the assumption that we are going to continue to go absolutely nowhere, but with the assumption that the next 100 points are going to be up. So again, basically net want to try to be a buyer somewhere near 112, looking for a pushback above 113.20 in the euro currency. I suggested that I'd rather be short gold than long based on the 76% retracement and some of the other factors here. So all I can say is I think we've definitely concluded that the ABC forecast was the correct interpretation, and prices should go a little bit lower. How much, I don't know, but we don't have any momentum divergence. The pattern objective has yet to be met, so I think if we could see a pushback up towards 1335 to 1337, it would have to be considered a courtesy opportunity. Courtesy rally, looking for a test of 1325 and possibly still keeping open to the 76% retracement down near 1317. Well, kind of missed up the year E-mini NASDAQ, or at least it looks that way. I thought we'd have a washout of 4,800 for this Wave 4 correction that I've been talking about, and the market got to like 4,800 and a half, and it's turned back higher. I have revised the wave labels location here a bit to suggest that the wave 3 peak was actually this first push above 48.50. And we'll just see. Prices really need to keep cruising here or we're going to have a problem. But ideally, the market will move higher and put in one more nominal new high, test 4,900 perhaps, and then head back down again. So the E-mini NASDAQ looking better than the E-mini S&P. But again, this is really important short-term wave behavior. We don't really want to see it fall back below 48.45, or we could be looking at something we don't currently understand. So again, cautiously optimistic here still, but risk is high. You know, anytime the market rallies, risk is high, and the 76% retracement, which may be a critical number, is 48.70 in the E-mini NASDAQ. All right, concluding today's video with the E-mini S&P, which, boy, you know, we talked about the reasons that it could stop going down where it did. That was right around the 76% retracement of the last wave. It also, as I pointed out on the previous video, held this falling RSI support line, which is interesting, if nothing else. I'm not sure what to make of this move here. Honestly, don't know. Probably going to trade up, and the 76% retracement is near 2165. But again, we are looking at a very dicey range here between 2135 and 2155, and I don't know if we have left it or if we are going to be in it tomorrow when we begin with our real-time updates. So that's pretty much it for me. Not that much of tremendous insight here in some of the markets, but I think we do have some high probability patterns setting up, which could lead to some really quick short-term opportunities. So that's it for today. Ron Feinstein, New Wave Forecasting, September 27th, 2016.